Welcome to AYP's webinar series on debunking year-end tax calculation myths. I am Ruth, your facilitator for today. Today's topic is debunking year-end tax calculation myths in Singapore. The webinar will be cut into 5 different parts: the basis of Singapore's year-end tax, calculations, what's changing for this year, how to stay compliant, and finally, the recommendations. Before we move on to today's presentation, I would like to quickly clear up some housekeeping issues. As a matter of introduction, this webinar series has been prepared by AYP Group, a HR tech and services company with its headquarters in Singapore. We are well positioned with a regional presence that continues to grow in the ASEAN region, particularly across Malaysia, Thailand, Indonesia, Philippines, Vietnam, and Hong Kong. Moving on, as a disclaimer, this webinar series is intended to share with our audience some basic knowledge on year-end tax calculation and to clear up any doubts you may have. It is not intended to convey any professional advice. You may, however, contact AYP Group directly if you are looking for more in-depth information or tailored advice for your needs. As today's focus is on year-end taxes, we will avoid sidetracking into unrelated HR issues. At the end of the session, we will have a short question and answer session. Please use the Q&A feature at any time during this webinar session to ask your questions and like the questions you want to hear the answers to so that the most popular ones appear at the top. You do not have to wait until the end of the webinar to ask questions. Recordings of the webinar will be made available after the session, and if anyone is experiencing any technical difficulties during the webinar, please do drop us a note via the chat function. So without further ado, our presentation for today has been prepared by none other than our Singapore team. Our speaker is Alina, the AYP ASEAN Payroll Team Lead with 3 years of working experience in her field. Alina leads her team into providing responsive and accurate payroll services to customers both internally and externally. Without further ado, I will hand the time over to Alina to give you today's presentation. Thank you.
Hi everyone, I'm Alina and I will be your presenter for today. So today we will be sharing with you on what are the things to look out for when you are preparing for year-end tax in Singapore. Below will be the key topics in today's discussion. So first, we will be going through on the basis of Singapore year-end tax. So in Singapore, the income reporting period for the annual tax will be from January to December. So usually companies will start to prepare the year-end documents at the start of January of the following year. Do take note that it is mandatory for employers with 6 or more employees in the company to be registered under AIS, which is the Auto Inclusion Scheme. Under this scheme, employers are required to report all the incomes on behalf of their employees. The following deadline for employers registered under AIS will be by 1st March of every year. For employers who are not registered under the AIS, will have to provide their employees with the IR8A forms for them to do their filing by 15 April for paper filing or 18 April for e-filing. As an individual, you must file an income tax return if you receive a letter or an SMS from IRAS informing you to do so. So next, moving on to the income tax rates in Singapore. So for income tax rate for residents will be applicable to all Singapore citizens and Singapore permanent resident who resides in Singapore, as well as foreigner who has stayed or worked in Singapore for 183 days or more in the year preceding the year of assessment. Below is a table showing the tax rate from year of assessment 2017 onwards based on the chargeable income. The tax rates for resident taxpayers are progressive, which means that higher income earners will be paying a proportionally higher tax with the tax rate capped at 22%. So for non-residents, the employment income will be taxed at the flat rate of 15% or the progressive resident tax rates, whichever the higher tax amount. So below is a table showing the various types of income category and their respective tax rates based on an year of assessment 2017. So on this slide, we will be also sharing with you on some of the examples of items which are taxable and non-taxable. So firstly, employment income. So this will refers to all income derived by an employee from his or her employment unless specifically exempted under the Income Tax Act. Second will be on salary. So in general, salary refers to the payment in cash or other form received for the services of an employee provides to his employer. Therefore, salary is taxable. Third will be on bonuses. So bonus received from employment is taxable, and bonus may be contractual or non-contractual. So a contractual bonus is paid in accordance with the terms of a contract or service and cannot be withdrawn by the employer without legal consequences. Examples of a contractual bonus are 13-month payment or annual wage supplement. On the other hand, non-contractual bonus means the employer can withdraw or cancel it at any time before the actual payment of the bonus without legal consequences. This bonus is taxable based on the date on which the bonus is being paid. Next, on director fee. So generally, the director fees are sourced in the country where the company is resident. This is because all the functions of the directors in determining and controlling activities to earn the profits of the company are carried out in that country. So where director fees is taxable in Singapore, it will be treated as income of the year in which you are entitled to the fee. This is usually the date of the company's annual general meeting or when the director's fee is approved by the board of the company. So on commission, commission refers to the payment you receive in return for service provided. Therefore, commission is taxable. If you receive the commission from your employer, it will be taxed as employment income. If you receive the commission as a self-employed individual, it will be taxed as trade income. So next will be on other employment income, which is also taxable. So this may include allowances and benefit in kinds given by your employer. So example of other employment income that is taxable will be allowances, such as transport allowance and meal allowance, etc. Next will be benefit in kind. For example, club memberships provided by your employer in place of cash. Next will be salary in lieu of notice or notice pay as compensation for early resignation or early termination of contract. Fourth will be tax paid by employer. Tax paid fully or partially by your employer are also taxable. So examples of non-taxable items will be retrenchment benefits. So these are payments given by employers to compensate for loss of employment. However, do note that payments such as salary in lieu of notice or express payment apart from the loss of employment are actually taxable. So employers will also need to note that they will need to declare the full amount of retrenchment benefits under employment others in their tax form and send to IRAS. So things that will need to be provided to IRAS will also be the amount and breakdown of the retrenchment benefits. Second will be a copy of documents related to this lump sum payment and as well as a copy of the contract of employment. So director's fee are actually non-taxable as well. So as a general rule, director fee derived from a company that has no presence in Singapore is not liable to Singapore tax. So even if the directors may on some occasion conduct their meetings in Singapore. So on this requirement, they will not be taxable. So next, we will also be sharing with you on some of the different types of tax deductions which can help to reduce your taxes. Tax reliefs and rebates are allowable if you are a Singapore tax resident and you meet all the qualifying conditions. So these are a list of general reliefs available to all taxpayers, and we will be going through a few of the common tax relief. First will be the course fee relief. So to qualify for the relief, the course, seminar, or conference should lead to a recognized academic and professional qualification, and the provider has to be a Singapore registered entity with the ACRA. Secondly will be CPF cash top-up relief. This relief is given to encourage Singaporeans and PR to set aside money for retirement needs, either in their CPF accounts or those of family members. Third will be CPF relief, which will also be the mandatory CPF contributions for Singaporeans and PR. Fourth will be a supplementary requirement scheme, which is the SRS. It's a voluntary scheme to encourage individuals to save for their retirement over and above their CPF savings. Contributions to SRS are eligible for tax relief. However, do note that when you withdraw money or investment from your SRS account, the withdrawal is subject to tax. So there are also additional reliefs which are available to the respective group of taxpayer. For example, foreign maid levy is given to encourage married women to stay in the workforce, and grandparent caregiver relief is a relief given to working mothers who engage the help of their parents, grandparents, or in-laws to take care of the children will only be available to female taxpayers. Single taxpayer or male taxpayers will not be eligible for these categories. So there are also some examples of rebates, expenses, and donations. So tax savings for married couples and families. Second will be deductions for employees. So you may be able to claim tax deduction on employment expenses wholly or exclusively incurred in earning your income, which means you use your own money to pay for expenses necessary to your employment, such as travel expense, entertainment expense, or subscriptions, etc. So third will be the deduction for sole proprietors, self-employed, or partners. So deduction on rental expenses are actually related to income derived in Singapore. And also for lastly, the deductions on donations. So examples of deductions on donations will be cash donations, share donations, computer donations. So you may be able to claim tax deduction of 2.5 or 3 times the amount of donations made from 2014 to 2021. So how do you actually apply for tax relief? So all individuals will have to log into My Tax Portal and do the submission for the relevant claims. So when you are filing your taxes during the income season, when you log into My Tax Portal, you can go to edit My Tax Form and then choose deductions, reliefs, and rebate and select the category in which you are submitting the claim for. And also key in the relevant details and update the claim. So if you have claimed this tax relief last year, it will actually be pre-filled for you and you can make changes if needed. So staying compliant when preparing for annual tax. So things that you should look out for will be ensuring that you have all the correct pay elements mapped correctly to the tax category if you are using a software to process. Secondly, ensuring the accuracy of all the personal details and income reported to IRAS. Third, if you have any benefits in kind or stock options, remember to declare in the respective forms and submit to IRAS. So for Appendix 8A is the benefits in kind form and Appendix 8B is the stock option form. So lastly, and the most important will be the deadline for submission. So here are some consequences that individuals might face when the annual tax is not being reported to IRAS. If you fail to file the tax return before the due date, IRAS will issue a notice of assessment and you are required to pay the estimated tax within 1 month. As it is an offense, if you have failed to file your income tax return before the due date, IRAS may allow you to settle the offense through the payment of a composition amount which ranges from $150 to $1,000 dependent on past filing and payment records. Court summons will also be issued if IRAS does not receive the required tax return and or payment of the composition amount before the due date. So what you could do, we will also be sharing with you on some of the recommendations that company may do. So firstly, employers may choose to outsource to a professional payroll management partner, or secondly, considering on getting a on-cloud SaaS HR and payroll systems to help to manage. So below is a list of advantages when you choose to outsource to a payroll vendor. First will be the time and cost savings. Secondly, ensuring the accuracy of payroll and annual tax. Third, ensuring uninterrupted work. Fourth, annual income preparation and submission are well taken care of. And lastly will be compliance to the rules and regulations in Singapore. So the list of the advantages of subscribing to a HRMS will be, it will help to reduce paperwork, and is a central storage and provide a bird's eye view. The system will be updated with legislations change, ready-made tax form for filing, and lastly will have the options to automate payouts, calculate taxes, and enroll in benefits. So this is actually a view of our HRM system where there are available forms for generation, and you can also download the text file for e-submissions to the IRAS portal if your company is registered under AIS. So did you know that 43% find improved availability of information using a HRMS solutions? And below are some key findings and trends of the top payroll-related challenges or risks identified globally. So we have come to the end of this webinar episode on Singapore year-end tax sharing. If you have any queries, please do not hesitate to contact us, or you may visit our website for more information. Do look out for our next webinar episode, which we will be sharing about Indonesia year-end tax on 19 November, 4 p.m. Thank you.
Thank you for the informative presentation, Alina. I'm sure we all have learned something valuable. We had a few questions come in during the presentation, which we have yet to answer, and you may continue to send your questions in as we go along. Therefore, for the next part of this session, we will be taking and answering questions. As you may note, we have already answered some questions asked during the presentation in our attempt to answer most questions. But we have kept some general questions that we thought our audience may benefit from learning the answers to. So without further ado, thank you for your time, Alina. So our first question will be, how do I e-file my income tax return?
So you may actually e-file your income tax return either with your IRAS PIN or SingPass via My Tax Portal.
Okay, thank you. And our next question would be, are retrenchment payments taxable?
No, retrenchment payments made to compensate for the loss of employment are not taxable. However, the retrenchment package may include payments for other purposes that are taxable. For example, leave pay, salary in lieu of notice, and gratuity. So these are not payments received as compensation for loss of office, but are payments for services rendered.
Okay, so one user wants to know, I am claiming foreign maid levy relief. Can I also claim grandparent caregiver relief?
Yes, you can claim grandparent caregiver relief in addition to foreign maid levy relief if you satisfy the qualifying conditions for each relief.
Okay, and when is the deadline for AIS registration?
So the AIS registration for Year of Assessment 2021 is actually open from 1st April 2020 to 31st December 2020.
Okay, and when is the deadline for AIS registration?
I think this is the same as the previous one, which is by 31st December 2020 for AIS registration.
Okay, and is it possible to submit hard copy of IR8A if we are already registered under AIS?
No, once the employers actually participate in the AIS, all employees' employment income information must be submitted to IRAS electronically. So the employer will have to do the submission by e-submission to IRAS.
Okay, I realized I made a mistake after filing my tax. What should I do?
So if your company is actually under AIS, the employer should log into tax portal to do the amendment accordingly. But for individual submissions, the employee will need to log into tax portal and make the necessary amendment. However, before all the submission, all employees and employers should check on all the personal details and income before they proceed with the submission to IRAS.
Okay, and how much time would you recommend one spend on preparing their year-end taxes?
The company or the employee should start preparing the year-end tax as early as possible because for AIS, the due date is 1st March. So they can actually submit earlier, like in February, to not clash with the others.
Okay, so on average, how much time would you say people need to complete the filing and everything?
So for if you are using a software to process the IR8A, the forms are actually generated directly from the system itself since all the payroll details are all there. So it should only take around probably 10 to 15 minutes for all the checking of the income detail. And for AIS, you use the text file to submit to IRAS, which will only take 5 minutes to complete.
Okay, and someone else wants to know, are unemployment benefits also taxable?
Employment benefits depends on what kind of benefit it will be. So for all those income and employment income, salary, all this will be taxable, but for retrenchment, all will be not taxable.
Okay, and are there benefits to filing taxes early?
No, there are no. The benefits will only be that you will not be clash with other people during the busy period. So as long as you file by the due date, there will not be any penalty incurred.
Okay, thank you for your time, Alina. We have come to the end of today's session. For the questions that are still unanswered, please rest assured as we will categorize the questions and follow up with an email later. You may also contact us at sales@justtalent.com should you have any additional questions. Thank you for sitting through our session, and we hope that it has given you a clearer perspective on year-end tax calculations. If you enjoyed our session today, please feel free to join our next webinar session of this series. Thank you, and we look forward to seeing you there.